we are covering the Accelerated Death Benefit Rider for the national portion of the life insurance exam. This specific rider is a vital living benefit that allows the policyholder to access a portion of their death benefit, usually between 50 and 100% prior to their death. On the exam, you need to recognize this as the terminal illness rider. One of the most important facts for the test is that this rider is generally added to the policy at the time of issue without any additional premium cost. If you see a question asking which rider usually does not require an extra charge, the accelerated death benefit is a primary answer. The trigger for this benefit is a diagnosis of a terminal illness. The exam will often specify that a physician must certify the condition, and the illness must be expected to result in death within a certain period, typically 12 to 24 months. You should watch out for questions regarding the elimination period. Most policies have a 90-day waiting period that must pass before the insurer will release the funds. Do not confuse this with the waiting period in disability policies, as the purpose here is strictly to verify the terminal nature of the illness. When it comes to the impact on the policy, the exam will test your ability to calculate the remaining death benefit. If an insured person has a policy with a $100,000 face amount and chooses to accelerate 50%, they receive $50,000. The test will ask what happens to the remaining $50,000. That amount stays in the policy to be paid to the beneficiary upon the insured's death. However, be aware that the insurance company may deduct a small amount for interest or administrative costs because they are paying the money out earlier than expected. A major point of confusion on the national exam is the difference between an accelerated death benefit and a viatical settlement. This is a common trick. If the money comes from the insurance company through a rider in the contract, it is the accelerated death benefit. If the policy is sold to a third-party company in exchange for cash, that is a viatical settlement. To help you remember this, use the mnemonic ADB, which stands for Advance During Breathing. This simple phrase reminds you that the insurance company is providing an advance on the death benefit while the insured is still alive. Regarding taxation, the exam typically treats these payments as tax-free for terminally ill individuals. This mirrors the tax-free status of the death benefit itself. However, the questions usually focus more on the reduction of the face amount rather than the IRS code. You should also know that the policy does not terminate just because a partial payment was made. As long as the remaining premiums are paid on the reduced face amount, the policy continues in force. If you encounter a question about the cash value of a permanent policy, remember that it is often reduced proportionally to the reduction in the death benefit. Focus on the physician certification requirement, the lack of an extra premium, and the dollar-for-dollar reduction of the death benefit. This rider is designed to provide financial relief during the most difficult times, and the exam wants to ensure you understand how it functions as a living benefit within the contract. Always look for the specific medical time frame and the fact that the insurer is the source of the funds to distinguish this from other options.